Richard Krugel, Price and Actions Income. Today's going to talk about plug and play profit signals. It's a bit of a tongue twister.
Yeah. You did good.
Yeah. How to generate better profits by actually trading less, finding trades and multiple entry points in any market, and then leverage critical gains to grow your account on autopilot. Raleigh, have we forgotten any of the housekeeping items?
No, I think we're in great shape. Thank you for that introduction. And we just want people to sit back, enjoy, and really absorb all the great information that they're going to be hearing today.
Okay. So Ricky, technical analyst at Price Action and Income, a full-time trader and educator. He's guided his members to over 300% growth since launching Price Action Income in 2018.
That's Richard here. Can you hear me all right?
Yes, can hear you just fine, Richard.
Hello, Raleigh.
Guys, I can ask you to turn the volume up a bit because I'm not getting a lot of sound.
Can you hear me now? Is that better?
That's a little bit better. Yes, indeed.
I'm actually on full volume here. I have to apologize. In our country, in South Africa, they have rolling blackouts all of a sudden. And luckily, I do have a backup system. So I can run for about 8 hours if needs be to keep the internet and everything up and running. So that just happened as we started this right now. So
oh no.
Yeah, so the power went off and at least I'm up and running. I'm the only guy in the office that actually has a system here that's backed up. So that's all good. I might be in a little bit of the dark if I start my camera. So I do apologize for that.
Not too bad.
There you go.
There's some screen glare in the back, so at least you can see me. So yeah, thanks for having me. If you guys are ready, then I'm ready to get going.
We are. Do we need to help you at all with any of the screen share functionalities, anything else?
Just quickly have a look at that. I've got my slides ready. And share. Can you guys see my screen over there?
Yes, we can. Looks great.
All right.
Super job. I'm going to sign off and leave you to it.
Thank you very much. We'll chat again later.
Thank you.
Yes.
Awesome. All right. Let me just get my ducks in a row. I've got all the slides ready. And yeah, thanks, guys. Thanks for having me, Pat and Raleigh and everyone else there. First time meeting you guys. Really great being with you today. Well, I'm going to be talking about my plug and play profit signals, and I can show you with just how with a few trades per month, though, you could generate an extra $10,000 per month without living in front of your charts and really without trading every single day. So guys, like I mentioned before, thanks for joining me. I hope you're all really staying safe and sound in these crazy times. 2020 obviously turned out to be a pretty crazy year. We've just came out of a hard lockdown for about 5 months. I think we were the country with the longest lockdown. But yeah, things have been eased a little bit. So I'm back at the office, and luckily I did remember to bring my backup system because the power just went off. So if you do hear a little bit of a background noise, then please, I do apologize for that. That's just my inverter or the UPS system that's keeping me going at the moment. Yeah, so guys, I just want to quickly talk about what my personal goal for today's webinar is, and that's to show you a simple process for showing or for growing your account basically on autopilot. And while only taking a few trades a month and without spending more than a few minutes a day setting it up or managing your positions. So if you're ready to simplify your trading routine without sacrificing consistent returns and without giving up your growth, then please stick with me for the duration of my presentation, because I really got some cool stuff to show you guys. And guys, this is what's my goal for you guys today. And it's basically to show you how it's possible to generate consistent, reliable returns every year without trading more than a few times per month. So I already mentioned that this is a simple process that doesn't require more than a few trades in a given month, and that it won't take more than a few moments to plug and play this into your platform and really go about your day. But the thing is, like you might be asking, what is the secret sauce here? And well, there's for me a special signal that I've been going to show you that makes this whole process tick. And before you ask, it's not really specific to bull markets. In fact, these signals can appear in both bull or bear markets. and they generally lead to really good profitable opportunities in all markets, all freely traded, liquid markets, stocks, forex, commodities, and more. I even have guys trading options using my my methodology. So if you're ready to see a few of these signals plus my simple process for growing your account in autopilot, then guys, let me know in the comments over there. And yes, one reason to stick around, I'm going to show you my trade performance, my winners and my losers. So you can see how this quadrupled my account since we launched with price action income in 2018. Guys, so for those who do not know me already, my name is Richard K. I'm actually not English, that's my second language. My name is Richard Krugel, which sounds a little bit funny. It's actually from the Dutch side of my family. A bit of a background there. I'm an ex-Navy diver. I joined the Navy after school. Didn't stay long. I only stayed for like 2 years and then started traveling the world. Currently a very dedicated family man. I've been a professional trader for more than 10 years. Something I do not really like to boast about too much, but something I am proud about is that I was also the first person in history to complete a circumnavigation swim around Spain's largest island of Mallorca, which took me 360 kilometers, or for you Americans out there, 223 miles. Took me 20 days to complete, something I'm really proud of. But, you know, I'm also the guy who refused to give up and kept at it until I achieved success. Something I'm really, even more proud about than my little swimming stint I did over there is that over the past few years, I've helped many traders experience freedom, and I've trained over 4,000 traders here at Price Action Income with my exponential profit system that I personally developed, or the EPS for short. And it was with this system that I managed to deliver trade results that generated 300% in returns for my members and for myself. But guys, over the years, I did a lot of things right, and I've learned a lot. I really do not have any financial background. I've just really stuck with things, really put in a lot of effort there. But although I did a lot of things right, I also did a lot of things, or made a lot of mistakes, if you can say that. But believe me when I say it really was not easy getting started at all. I've endured plenty of early hardships. I've had failures upon failures, but eventually my determination and persistence paid off when I started developing my own trading system and when I partnered with Price Action Income to help others do the same. But you guys, after doing this for 12 years, I've worked on a fast-paced trading floor in Cape Town, developed my own trading system. I eventually quit my day job and started trading for a living, and starting my own trading educational business where I trained over 4,000 traders. I've guided all of them for over 300% account growth since we launched in 2018, like I mentioned before. But I ended up learning all of these things the real hard way. Something I really like to you guys to understand. But what I'll be showing you today is that you can get to cheat and steal my shortcuts a little bit. So what is it like to learn the hard way, guys? And I'm sure this will resonate with a lot of either newbies or experienced traders. What it's like blowing accounts and going broke, the constant stress that you have to be under, living in front of my charts all day long, missing a lot of time with my wife and my kids, which was extremely difficult for me to digest, but, you know, almost throwing in the towel every week because I felt destined to fail. So what changed for me along the way, if you must ask? And for me, well, I discovered that in any market, regardless of varying models, that there is a science to how price moves. And this is what's called market geometry. And to me personally, that changed everything. But I want you to understand, guys, is that I did discover this the hard way after many years of blood, sweat, and tears, like I mentioned. And if I only had one wish back then, before I started my journey, I really wished that I actively sought a mentor earlier in my life. I've actually had the pleasure to meet two great traders much later during my trading career that really put me on the right path, and I'm really grateful for them. So yeah, I basically, like so many traders do, they can sometimes learn a system or a strategy or methodology or whatever it might be. And I just picked the those pieces apart and put them all together into a system that really worked really well for me, and also taking my time constraints into consideration, which is eventually what I did. So today I want to show you a really easier way. What would you do if you can eliminate all the mistakes I've made and grow your account quickly? Now, I want to give you the opportunity to learn from my mistakes. Guys, keep those comments going. So if I really like you to put them there in the chat, let me know if that sounds good. Now, before we dive into the market geometry techniques I use, you might first want to know what market geometry is. Now, for those guys that do not know what market geometry is, my definition is basically that there's an underlying symmetry prevalent in all markets. Basically, is how price structure evolves over time, and then using certain drawing techniques and drawing tools to expose that underlying symmetry is what's called market geometry. And I'll be showing you some examples in the next few slides. And this brings me to the first weapon in my trading arsenal, which many of you might already be familiar with, and that's called the pitchfork. It's probably a tool that's been gathering a lot of dust there in your trading platform. Some trading platforms have really good pitchfork tools and some not so much. And but for me, applying this tool to your chart correctly is what really gives you instant perspective. And for those of you that do not know what a pitchfork is, let me just quickly go over some of the settings here and a bit of an explanation there. Basically, there's the standard pitchfork, which there will be different names in different platforms, which was created by Dr. Alan Andrews. Sorry, I'm stumbling over my words here. And basically, if you can see my cursor on the chart here, a pitchfork is drawn by selecting three important anchors or pivots or highs or lows, whatever you might want to call it in the market. In this example, just an example, was on the gold spot price. In a downward sort of trending market, you'd first select an important high in this case. This was actually taken from a few years ago. And selecting that's your first anchor point, in this case selecting a lower low and then a lower high like there, and then you have these lines projected into the future, in this case at a certain angle. Now your standard pitchfork will quite often be projected at a steeper angle. We'll be going over a second setting that I use quite often. But again, for you guys that's not familiar with pitchforks, Dr. Aaron Andrews called this center line a median line, and basically this line is projected at a 50% between the, how can I say, range or the points between your second and your third anchor point. This is also referred to as your center median line. Then we have an upper median line and a lower median line that runs parallel to the center median line that's projected from your second and your third anchor point. And this is what your standard pitchfork pretty much looks like, standard setting. I then go a little bit of a step further and add what we call an upper warning line that I color in red, and lower warning lines that's projected below your lower median line and your upper median line. Sorry guys if this all sounds confusing, but this is what I do on a daily basis using this tool quite often. I would quite often use a standard pitchfork to determine trend and also look at when a trend might possibly change. Now I've added these red warning lines as well, because in some stages when the market's moving fast, they tend to catch fast moving markets, and these lines will typically act as dynamic support and resistance. So not a horizontal line as support and resistance as most traders would see it. These actually give you angular lines of support and resistance. All right, guys, and that brings me to my second pitchfork that I use the most. Is called a shift pitchfork. Now the story goes, it's called a shift pitchfork because of this guy. I can't remember his name. His surname was Schiff. And he was actually either a student or he met Dr. Alan Andrews at one of his seminars. And he proposed to Mr. Alan Andrews that there could be another good way to use the standard pitchfork by reducing the angle or slopes as to not have a very steep angular median line, an upper and lower median line, And how he achieved this was basically still selecting, in this case, I'm using an upward sloping price chart, where you'll still select 3 pivots. In this point, a starting point, a higher high, and then a higher low is your third anchor points. And then rather than having your center median line starting from your first anchor point and projecting through the 50% of this range, he instead proposed to Dr. Alan Andrews that you slope the center median line to 50% between the range of where your first anchor point or your pitchfork starts from to the high of your second anchor point. And as you can see, this results in a flatter angle sort of slope. Now, guys, just a quick note here. This is the pitchfork setting that I use most often, and I do enjoy using them over corrections. We'll be talking a little bit about corrections a little bit later. I tend to track corrections within trends and then attempt to enter at the end of where I believe a correction might have ended and then join a trend as it continues. So yeah, just a quick introduction if you don't know what the pitchforks are about. There's also what they call a modified shift pitchfork, which is not on the slides over here. But for those, I use channel lines, which is exactly the same as a standard pitchfork, but only if you use the same sort of anchor points. But that's something that I do explain in my courses to my members and for the services that I offer as well. Okay, so then a market geometry secret number 2 is that identifying the trend. And trends can be deceptive, luring traders into the deadly trap. Before I explain this chart, what do I mean by a deceptive trend or entering at the wrong time? As you all know, there's a saying out there that the trend is your friend, but the question really should be is where exactly do you get into a trend? If you get in too late, then you might have a correction that goes against you, or maybe a complete change in the trend, obviously depending on what time frame you're looking at and so forth. So this is what my methodology is based on, using market geometry specifically over corrections. And this is what happened with this example earlier this year. I think this was our first trade that we took. It was on the Euro Canadian dollar. And we had this correction. With what I do with the courses also, we quite often really put a lot of effort in identifying 4 main corrections and then knowing what these corrections tend to behave like, what the characteristics are. We then use market geometry like the pitchfork and sometimes channels to figure out where a correction might end and then identify the zone and the area before price actually reaches that. And then once we have certain entry conditions, which I'll also chat a lot about a little bit later, once these entry conditions fire off, I will then get into a trade. And also, rather than just trying to find the end of corrections, I can also slope a pitchfork into the direction you want to be trading in and use that to safely trail your stops, know where to put your targets and so forth. All right, guys, so that was just a quick example of a correction that we took. And then my market geometry secret number 3 is getting the entry perfect, learning how to find precision entries for maximum profits. So guys, this is really important. A lot of traders tend to not plan properly, especially if you're a beginner trader. With this EPS strategy, I tend to plan my trades properly, wait for the markets, if they do follow my plan, and then wait for my entries according to my entry conditions. And to get into great, mostly at entries or points where corrections might end at the most opportune time, where your risk is the least and your profit potential is higher, I do follow very specific entry conditions, like I mentioned in the previous slide, before I would even consider executing a trade. And basically these conditions that I follow are reversal candlestick patterns, and I'll also look at momentum divergence, which I'll show you in the next slides. And these conditions, very, very importantly, they must appear at an area of market geometry that has been identified beforehand. And this is what I mean by actually applying a correction over, my market geometry tools, again, in this case, a shift pitchfork over a correction. You'll see that I'm here using a smaller time frame. I also combine multiple time frames and use a very step-by-step simplified process to drill down into actually identifying a zone or entry area where I would like to take a trade, or where I think a correction might end, which is exactly what I did here on the US dollar Canadian dollar. I identified an area and zone and basically just waited for the market to move. And you'll see here it actually was moving after a strong move into this warning line area over here. And this is how I basically identified an area zone that I'll be interested in trading. And quickly to explain momentum divergence, I look at the MACD histogram, which most traders are familiar with. Simply put, momentum divergence is when a market, in this case, as this example, a market was moving down into a low, but while price was going one direction, the momentum was on the MACD histogram was starting to slow down as well. So this is a different entry condition that I need to see at an area I want to trade, and to a zone that I identified beforehand. And then also, as I'll show you in the next slide, also I do follow reversal candlesticks. There are 4 or 5 main ones that I do follow. And it's also just like an extra condition that I need to see that the markets might be getting ready to reverse. Again, guys, all this need to happen at an area of market geometry. And sometimes, in some cases, multiple confluence areas or lines of market geometry taken from different time frames and so forth. Okay. How are we doing for time there? We're about half an hour in. Okay, guys, and this was that US dollar Canadian trade that I showed you earlier. And this is, I didn't show this zone, but price moved into that area that I was looking at to trade. And I had what I call a bullish flank doji pattern. I'm aware that there are millions and millions different names for candlestick patterns. This is just what I use to simplify it for myself and my members. This doji pattern, straight down doji with a reversal. It actually came into that red warning line and that area I showed you before. I then had more than 5 minutes to place an entry, knowing exactly where to put that and also where to place my stop loss. Sorry, guys, going the wrong direction there. And this is basically a trade result of that US dollar Canadian dollar. I was actually waiting for a correction. I was actually anticipating a correction a few days before price actually reached the level. And this is also what I teach. This might sound like a lot of components involved in the EPS, but it's broken down very easily. And then once a correction happened, I used that 30-minute chart that I showed you before to draw market geometry sloping into where I believe it might have, this correction might have ended. And as you can see in the small red line, hopefully is visible on your screen over there, price actually shot straight up. I knew exactly where to place my targets. And this was a really good trade, probably one of my best trades in the past 3 years. We had a massive return on this trade. I'll be showing you a little bit later of what we achieved with that. But targets, knowing in advance also where to place your targets. In this case, you could either place your targets directly above your entry at your center median line or your upper median line, but you can also change them dynamically if you manage to get into a nice trending market, which is exactly what happened over here. All right, guys. Next up, so for me, there's 3 secrets to living and trading on your own terms. And instead of trading every day, I can make personally equal or better profits trading only a few special signals in a month. And I don't have to worry about missing trades because these signals provide multiple entry points in every market that I trade. And you really don't need a massive account, and you don't have to take on extra risk to leverage these gains. So again, secret number 1, let me elaborate on this first point. Instead of trading every day, I can make better or equal profits trading only a few special signals a month. For me, trading less but focusing more on quality trades that requires careful planning, I've become way more consistent and, very importantly, stress-free. And you might recall that I mentioned working on a trading floor earlier. That's because when I used to day trade the South African equity markets, I used to trade in excess of 50 trades a day. I had guys sitting next to me that executed in excess of 200 trades a day. But I can really tell you that it was not easy, and it was extremely stressful and very time consuming. And in the end, I did not enjoy the pressure anymore, and I really had to sit myself down. I was starting to get in trouble with my wife a little bit because the stress was really showing. My tempers was flaring. So for the sake of that, I really needed to change my strategy and free up some of my own time. And the secret number one, instead of trading, oh, sorry, I'm going the wrong way again. So instead of fighting tooth and nail for every small gain I could find, I realized I could make equal and better profits just following a few special signals per day. And really after that, I never looked back. So secret number two, I don't have to worry about missing trades because these signals provide multiple entry points in every market that I trade. So what do I mean by this? And this is an example here on Australian dollar, US dollar, where my first signal, for example, returned over 1,800 US, and then another 1 month later, it returned $882. So on the first signal, I went short, and then on the second one, I went long. So there can be more than one signal per any market in any direction. And sometimes when I've missed the first signals, maybe I was asleep or busy doing something else, then very often I can find another entry at a later stage. It's a very more relaxed type of trading without FOMO, without fear of missing out on trades or chasing the markets, which is very important. And, you know, sometimes I might take a loss on my first attempt, but then nail it on my second attempt. And like I mentioned, there's really no FOMO when trading with the EPS. Here's another example on pound US dollar. First signal, just over 1,500. Signal, profitable. Third signal, profitable. And then there are the markets or instruments that just keep on giving. One of my absolute favorite markets when I used to trade a lot of futures, I still do trade the futures now and then. I prefer to trade the crude oil market with options, but still using the EPS system to get me into good positions, considering your time that you have on with your options. And there's 8 signals, the last 8 signals I took on crude oil. 7 out of them were profitable, only a small loss. Like I mentioned before, I do actively manage my open positions, and generally when you do take a loss, it's not a full loss. It's very rare that I take a small loss or a full loss, but they do happen. That's just reality of trading. And these are all great examples, guys, but what if you take on multiple losses, and does that really mean that a trade is dead? And no, not at all. Here's an example on the Canadian dollar, Japanese yen, where I traded my first 2 signals a little bit early. The first one was a small loss. The second one, I broke even. And then on my third, fourth, and fifth signals, and this was actually a case where the market changed direction. I just had to change my bias and just followed what the market was doing and managed to get in there 3 times and also turning some profit on there. Same with the pound yen, guys. First signals are lost. There are times that I can go through a drawdown. Don't let anyone tell you they make 100% profits all the time. That's I really do not believe that sort of things. There's a lot of BS out there. But it's just great to know that, you know, at least following specific signals that I've been talking about right now, that you, although you do take losses, that you most often have a second or third chance to take another entry again. And this brings me to my final secret, guys. You don't need a massive account to traders, so you don't have to take on extra risk to leverage these kinds of trades. And I really didn't have a big account when I started trading, and I personally never risk more than 2%. We have some members that don't like risking more than 1%. Some of them are a bit more risk averse, but I really never risk more than 2%. And you certainly don't have to risk your account balance to get the most out of your risk reward either. And speaking about risk and reward, how would you guys like to learn how to find an entry that turns on a dime and then with only using an extremely tight stop, increase your profits by over 10 times? And this is where I want to get back to that slide of the US dollar CAD. I only took a 12 stop loss from my entry, distance from entry, sorry. Let me just take a sip of water here. And that was the result. I've showed you this before, also using pitchfork float in the direction I want to trade to manage my open positions, know where my targets might be placed. And this basically was a game changer. It quite often happens that you need to always position yourself firstly, what I call you need to be in it to win it. But once you're in a trade and you can really have a system to not just enter a trade, but also manage an open trade to really try to milk the market for as much as it can give you before you get stopped out, then this was one of those beautiful trades. I had more than a 45-to-1 reward to risk ratio on this trade, and that it was really a really great way to kick off the year. This actually happened a couple of years ago. I haven't had one that big yet, sometimes some 10-to-1s and so forth. But like I said, it can also change when market conditions change, volatility and those sort of things. So guys, again, in a 10K account, that was over $7,400 return, and that's on one single trade in 1 month. And obviously, if you had a bigger account, it would have been different for you. You could also have done this in a smaller account, depending on which markets you trade. Obviously, if you trade this in a futures account, you might have needed a bigger account as well. But even having the opportunity to catch these trades or moves a few times in a given year can radically change your account. So how many trades do you really need to see consistent accelerated growth, guys? And this is really a good question. Think about it for a moment. Do you really need to trade every day to be profitable? More importantly, is it worth giving up all of your free time? Now, look, there are a lot of trading styles out there, and if you're really hardcore and you like being in the thick of things day in, day out, in trading small time frames, then more power to you. You know, but I've used to do that. There's a lot of guys that I knew that started off day trading. It's not something I would really like to do ever again, but I mean, that's up to you. But I quite found that, you know, I was losing 10 pips for every 10 pips that I made. I was taking 2 steps, one step forward, 2 steps back sort of thing. And I was always on the clock staring at charts until everything starts swimming in front of you and really confusing me. So this is one of the reasons also why I created the EPS system. And this to me is what trading successfully really looks like. Only taking 1 to 2 trades per week, fewer active margins locking up your account, plenty of time for trades to set up, plenty of room for retail traders to catch big trades or big swings, opportunity to reduce your risk over time, and spending 50 minutes a day on your trading routine and spending the rest of your time however you see fit. So if you're only trading a few signals per month, how many of those signals do you actually need to win and still see accelerated growth? And to show what I mean by this is here are some of the detailed performance stats that I personally have with my members and the EPS forecast system that I have with a starting balance of 10,000 US. We're currently standing at over 42,000. It's over 32,000 profit. An average win of about $1,000, an average loss just over $500. Break-even trades only took 8. And that's only a winning percentage of 51%, guys. That's right. Even trading only 1 or 2 times per week, you'd only need to win half of your trades with a system to see pretty decent growth. I even know some guys that trade with only 35% win ratio, but obviously they're aiming for much bigger rewards than the risk that they're taking on. Okay, yeah, guys, this is what I'm going to do for you guys today. I'm going to share these plug and play profit signals with you and also give you my exact plan for trading each one. And guys, you can always go and try to figure this out on your own, but time really is the most important thing we have. And I want to save you your most precious asset by sharing my life's work with you today. And these signals that I'm talking about aren't vague buy or sell signals. They are my personal trade forecasts. And all you have to do is plug them into your platform to pick back my profits and my trades, my entry levels, my stop loss levels, how I manage open trades, etc. And you'll really never have to live in front of your charts ever again. So guys, this brings me to my offer. We've got about 15 minutes left. I would also like to have some Q and some questions come in after this. If you guys have any questions for me about market geometry, that'd be really great. But before we get there, we generally have EPS forecast retail for 1 year only, but only for today's webinar, we decided to add 2 weekly plug-in profit signals for 2 full years instead of 1. That is nearly $6,000 value. I'm going to do 5 weekly trade forecast reports for 2 full years. That's nearly $3,000 of value. Just quickly touch on that subject over there, or that point, is that I write a report 5 days a week, a full report, which I then broadcast to my members. And so they'll then get a notification in the inbox that the report's ready, and they basically just log in and they take it from there. And I'll show exactly what new trades I have. So these 2 trades I do normally on a Tuesday and a Thursday, and then all the other days in between I'll be managing my open trades. And then, guys, we also have economic news and timely updates for 2 full years. That's almost a $2,000 value there. Instant entry and management alerts, plus my private Telegram access for 2 full years again. So almost a $2,000 value there. And then the ability to go live with me every month to talk markets with my members and get trading tips for 2 full years, almost a $3,000 value. And it all actually sums up to about $15,000 US. And well, guys, you can see, while this is all well worth over $10,000, I mean, even $5,000 would actually be amazing. But since I know people are struggling at the moment, and at these past few months with COVID and everything going down, things have been extremely tough, and I'm going to be going even lower for you guys today. So if you want to really get into this there, we've got a sign up link down here. I'm going to be offering this for 2 full years for only 1,497 days. Again, guys, just for today's webinar. So if this is something you're interested in, then please take us up on this offer. Like I said, it's for 2 full years. And we also, people will stand by our word. If you do not like anything that you might find with our services, then you have a 30-day full money back guarantee. You can at any time just drop us an email and we'll refund you, no questions asked. And guys, that really brings me to the end of my presentation. If there are any questions, then maybe you guys can relate that to me. And I'll be more than happy to answer them for you.
Absolutely. Hey, Richard, thank you for that presentation. And once again, for those that you may have missed it, Richard's joining us from South Africa, and he's in the middle of a rolling blackout, so he's running off of generator power there. And it's incredible how the technology works. But I did note some questions that came in, Richard. One of them was, how many markets do you actively monitor?
I like the currency markets, Forex. I also love trading stocks and commodities. On the commodity side, I like to use my EPS system and trade options, to be honest with you, with that on the commodity markets. But I tend to have a basket, if you will, of or maybe a watch list that I set up, my favorite markets I tend to follow, and just keeping an eye on them daily and continuously analyzing and updating my analysis. And then if I do see any opportunities arise, then I'll be covering those. So it's really for anyone. I know we have some members that only trade Forex. We have some members that only trade stocks, but I really try to, have a good mix in there so everyone can benefit from the actual forecasts. Okay,
that's great. So the key there is that you have a watch list of markets that have performed for you over time, because it was apparent to me that you were looking at a number of markets, and so that's how you do that. Because it brings up another question that came on, which is, how much time do you spend actually monitoring the market? Now, I know one of your keys is not to trade frequently, just look for high quality trades, but it still requires you to put in some time and some analysis. So like on a daily basis, how much time would you spend in front of the screen looking at the markets that you're scanning?
Well, Rolly, what I mean by the plug and play service that we actually offering here today and that I've just explained is that I would personally do most of the work, do professional analysis using market geometry, and then obviously relay that to our members. So for me, I work on actually coming into the office around 7:30 p.m. in the morning, and I would do up to 5 to 6 hours of basically updating, finding new trade ideas, if I need to update some of the market geometry, so forth. So when it actually comes to the planning and all of that stuff, obviously I'm taking on the most of the workload here, because this is why we're offering it to people that might not have that much time to trade the markets themselves. But when it actually comes to entering a position, I have to be dead honest. We know where the targets are. And I also have that Telegram group that I mentioned to you before. A lot of our members love, receiving notifications. If it's not via email, if they quickly see there's a notification via Telegram on their personal devices, cell phone or tablet, whatever it might be, then if I see something and I need to trail my stop or anything like that, or I want to get out of trade, then they would know that. They would know that really quickly. So I do most of the heavy lifting. So if someone wants to learn the system themselves, then it's all about finding a market. I recommend that you maybe just track a few markets at first, but I've been doing this for quite a long time now. I can easily monitor 4, 5, 6 markets at any given time, but it's very rare that we actually take more than, I would say, 3, 4 trades in a given month because of the time frames and stuff that we're using. Now, hopefully that answered his question.
No, it does. I think that's fantastic because, it just really highlights once again the benefit of the service that you offer. So as a trader yourself, as a full-time trader, you're putting in 4 to 5 hours a day. And, and people that get the plug and play program are going to get the benefit of that without having to spend that time.
Yes, and then I'll obviously actively monitor the markets during the day. Also, I have to go home, obviously. So as a trader, it's really difficult switching off the screens, but, I could either go on my phone, I've set up alerts and all that sort of stuff. So if there's any sort of changes, then, I do tend to broadcast them out even before I go to bed. So I'm kind of there available for my members most of the day, obviously not while I'm sleeping.
That's great. And another question that I've got for you, and it's really germane to the topic of the webinar, Trading the Moment. Do you find trading today's markets, or even if you look back a little bit to when COVID became such a global pandemic back in March, have you found that these markets offer any kind of particular or unique challenge to you as you evaluate the markets, Richard?
Volatility, definitely. Especially with the currency markets, I'll be dead honest with you guys, is that I think over the past 2 months, it's been extremely difficult really nailing the analysis right, where you get the direction right. Then either not getting your entry conditions because of volatility. You have markets just like shoot in one direction and on a point just turns around. You didn't get your entry conditions. Now, what do you do in that situation? Do you just go and change and break all your rules, your entry conditions that I mentioned before? So it's been a challenge. Came up with a few more sort of aggressive sort of entries, which pulled off. But sometimes, something sets up in the middle of the night. You were right about direction, but the previous day you didn't take the trade, which just happened recently on the Euro Swiss. So I think COVID definitely missed in the currency markets, especially. If you look, a lot of the currencies have been trading in sideways sort of wide ranges, which makes it challenging. This also forces us to maybe look at smaller time frames. I'll generally look at larger time frames for bigger swing trades, but what's also nice is that we can use the same system or methodology and apply them to smaller time frames to find quicker and smaller sort of trades as well.
Okay, so
volatility, if you know what I mean.
Sure. So I guess the key takeaway for me was that we are seeing increased, in some cases, extreme volatility, but the system handles that. I mean, we've seen volatility in the past. It's just understanding that. And then I guess one final question that I have for you is more forward thinking as we in the United States approach what appears to be is going to be a very contentious national election. Do you believe that will have any impact on the markets in a way that causes you concern? Or is that just something that the market's going to consume? Your indicators are going to take those into consideration? What are your thoughts there, Richard?
I've quite often found that this is obviously something I'll be looking at very carefully. But I've quite often found, especially if you're looking at larger timeframes, and don't actually ask me exactly how this works because it still sometimes scares me, but it's quite a fascinating thing to see. Is that you'll quite often, when you look at, let's say, weekly or even monthly timeframes, it's not timeframes I really use to trade off, but I love to trade or love to actively draw my market geometry on those sort of time frames, and you'll quite often see that when a market approaches is one of these lines, it could sometimes take years to approach an important market geometry line and so forth, but you'll quite often see a reaction from there before some sort of big event like you're talking about right now. So it's always like as if the market is moving into something, and then strangely enough, something like this kicks it off. It's a bit weird, but it's just, I've seen this over and over and over and over again. Even on the S&P 500, when we started this year really badly, it came down. I was actually thinking we were dealing with an expanded flat correction, which is a triangle correction, something you see in very volatile markets. And I was of the opinion that this is what it could be. Obviously, a little bit after the fact, I think after a week when it bottomed and we started this bull market again, and just used market geometry to confirm, was there a way that something could have confirmed this? And once you do this, obviously in hindsight, then it sort of strengthens your idea that, yeah, you know, maybe everyone's wrong. Things aren't going to go that bad. Obviously, there's bigger fishes to fry. I really don't think the United States, sorry to say, guys, is in the stock market's in a very healthy position with things just going up, up. It actually would be, I'm not going to make any predictions here, but I think this next election is going to be very interesting. I don't know how things are going to work out, but I do know that the system will work. Maybe I won't take as many trades, maybe just focus on a larger time frame. But like I mentioned before, it's really cool to see sometimes how markets tend to reverse prior to one of these big news events or anything that could drive the market like this. And then you have a catalyst all of a sudden, like an election or, you know, the end of recession coming through or whatever it might be, that actually then really gets the markets going. So
sure.
Hopefully that answered your question there.
Well, it does. And Richard, on that note, I just once again, on behalf of all of us here, want to thank you for the time that you took to prepare and to give us this presentation.
Welcome.
Delighted to have you know, the kind of virtual international representation that we have. You're representing South Africa, dealing with technology issues, and it's just our pleasure to get to meet you and to get to know you. And we very much appreciated your presentation. I'm going to grab the screen now. And once again, Ollie. Richard, hope that you have a fabulous day. Take care.
Awesome, guys. You too. Thanks very much. Take care that side.
Thanks,
Bye-bye.
Richard. Thank you, Richard.
The Dutch twist to it, but great special for him on trade forecast, 2-year access to the weekly plug and play profit signals, 2-year access to the 5 weekly trade forecast reports, instant access to the instant entry and the manager alerts. And there is the special offer that he has put together. That's the link for the special offer, and that should also be sitting in the chat panel for you. So once again, Richard, thank you so much for coming. And we're coming up to the top of the hour. We're actually a little bit ahead of time, but we're coming up to the top of the hour.